Today we're breaking down an XRP buy-side trade taken on the 7th of July, 2026, using the Snap Ultra A+ Hub setup model. This was not a random long. The setup started with session behavior. Price first moved into a key liquidity area, creating the impression that sellers were in control. But instead of continuing lower, XRP purged liquidity below the session range, swept resting sell-side orders, and then quickly reclaimed structure. That purge was the trap. Snap Ultra A+ Hub looks for this exact behavioral sequence: liquidity raid, shift in control, imbalance creation, return to the correct zone, and confirmation through timing and pressure. After the liquidity sweep, XRP delivered a structure shift back to the upside. That told us control was no longer cleanly bearish. The market had raided liquidity, absorbed the move, and started rotating toward buy-side delivery. The entry came when price returned into the fair value gap and value area, while EMA timing, VWAP behavior, and flow conditions supported the buy-side case. This is where the A+ model matters. The trade was not based on hope, it was based on confluence. Session timing, snap range levels, liquidity purge, structure shift, fair value gap retest, EMA alignment, RSI and VSA pressure, and the final snap score upgrading the setup. After the liquidity sweep, the exit was planned into opposing liquidity. Once XRP expanded away from the entry zone and approached the next buy-side liquidity pool, partials could be secured. The final exit was based on session exhaustion, reduced momentum, and price reaching the mapped liquidity objective. The lesson is simple. Structure defines control, liquidity explains the trap, and the SNAP Ultra A+ Hub confirms when the setup is ready to trigger. This is how an A+ XRP buy-side trade is built. Wait for the purge, confirm the shift, enter the return zone, and exit into liquidity.